So when we talk about fossil fuels or renewable energy, the two numbers to keep in mind are capex and opex. So capital expenditure and operational expenditure. In the case of fossil fuel, coal, many types of gas, usually the capex cost is relatively low. So it's really inexpensive to get going and to start with building the initial infrastructure. However, the operation cost, which is what you need to extract the oil, transport it, store it properly, and then burn it to generate power, is the most expensive part of the process. If we then look at renewable energy, the capital expenditure, so the capital that you need to put up front, is relatively expensive, but then renewables don't require you to get any primary resource. You don't need to buy the wind and you don't need to buy the sun. And they just keep spinning day and night, and you don't have to pay anybody to be actively operating the wind farms. So if we think about it into a graph with the x-axis being time and the y-axis being the cost of the asset, what happens is that fossil fuels start at a much lower point because they cost very little, but then they have a steeper growth in cost, while renewable energy starts much higher, but then they have a flatter. And so from an investor perspective, there is a risk when investing in renewable energy to put a lot of capital up front. And so you have a high opportunity cost, but then that cost doesn't grow as much. And if you're investing into fossil fuels, it's very easy to get going, but then your cost grows over time. So for the first few years, it's less expensive for an investor to be developing fossil fuel or gas turbines rather than renewable energy assets. But in the long term, renewable energy is far better.
Okay. So it's not true to say that the sort of simplistic image I have maybe of this is that renewables are more expensive, but good for the environment. So people kind of push them a bit for that reason. And fossil fuels are inexpensive, but bad for the environment. So people kind of suppress them. There's actually a cost benefit to renewables, but it's delayed a bit. So people don't like the long-term thinking aspect of it. Is that what you're saying?
Yes, from an investor perspective, that's exactly what we're trying to say. Yes, they need to put the capital up front and they don't want to do that. From a user perspective or consumer perspective, we should all be advocating in favor of renewable energy because in the long term, renewable energy can be about 1/3 of the price of the energy that is generated from fossil fuels. This is what we call the levelized cost of energy. So over its whole lifetime, if we combine the capex with all the opex across all the years that these assets will be generating for, the total cost, which in this case is the area under the curve, will be about 1/3 compared to the cost of fossil fuel. So for us consumers, we would end up paying about 3 times as much if we were buying energy from fossil fuel rather than from renewable energy assets. But
Wow.
from a investor perspective, you don't really care because you're just going to charge the difference to the consumers. And so they're just going to, we are actually paying for these assets anyway.